Good morning, guys. It is Thursday, March 2nd, 2023. This is Bathrobe Business. I'm George Yoganov. I am awake. I got my coffee. Let's get into the news. All right, first story of the day. We're going to start with retail because retail has kind of continued the trend we've been seeing for the last couple of earnings calls. So we saw it with Walmart, we saw it with Home Depot, we saw it with Target. Now we're seeing it with Macys and Best Buy. So both Macys and Best Buy had very strong fourth quarters. They all did, for the most part, with the exception of Home Depot. They all had very good fourth quarters. They all topped expectations, all had strong retail numbers. Every single one of them, however, forewarned that they were going to be seeing lower purchasing this coming year. So that we would not expect to see higher revenues. In fact, we might see shrinkage in the economy. The fact that they're all echoing this could mean that they're all seeing the same thing, or nobody wants to overhype expectations and then have a higher crash if it comes. So this could just be a market trend where they're all just tempering their expectations, planning for the worst but hoping for the best. So Macy's had $1.71 earnings per share versus an expected $1.57. Revenue, on the other hand, did meet expectations. So they came in at a revenue of $8.26 billion. Still a very strong number. Best Buy earnings per share was $2.61 versus the expected $2.11, and revenue was at $14.74 billion versus the estimated $14.72 billion. So they eked out above expectations. 1 second, coffee break. Both signaled the exact same thing, though, that retail was going to be going down. We'll see if that actually comes to fruition. They're saying that because of inflation, people aren't spending as much. Could be, but it's funny to me how everybody seems to have their own excuse, and the excuses seem to contradict each other. What I mean by that is they're saying that the economy is going to go down because of inflation, that people aren't buying as much. However, the counter argument is that the economy is going to go down because of interest rates. So they're essentially all saying we're going to have stagflation. I don't know if that's actually going to happen. I think that's a 1-2 punch that rarely occurs. Yes, economic stagnation is possible, but with the job growth we're seeing, I don't think that's a reality. We're getting massive job growth. We have the lowest unemployment rates in 50 years plus. Job hiring is continuing. There is no sign that it is slowing. There are still more jobs than people to fill them. Anywhere you walk in, there's a now hiring, sign-on bonus signs. You can't just predict stagflation like that we're going to have incredibly high interest rates and we're going to have low purchasing power and wages are going to drop. Yet inflation is going to continue when people are still desperate for employees. They're out competing each other. They're offering sign-on bonuses. They're offering raises. It just does not make sense to me. So I am maintaining my prediction that the economy is going to be doing much better than we think it is. Travel is up. Bookings are up. Pockets are flush with cash. There is no sign in my mind of anything tangible that would say that, yes, we're going to be seeing drops in the economy, anything major. Simultaneously, even global shipping is up. I reported yesterday how MSC, one of the world's largest shipping company, is expecting growth in 2023. So I am maintaining my stance that the economy is actually doing strong. It's going to continue doing strong just because labor is such a powerful force. We'll see. I could be wrong. Maybe labor is going to be the contributing factor in stagflation because it's going to drive so much of the inflation while the economy lags. But at the same time, when people have money and they're spending it, I don't see how the economy can drop. I don't see how you can get major drops in any sector when people are just going out and spending. Like I've said before, people are spending in different ways, but I just don't believe it. It just does not make sense to me. Another story, and this is actually the last one of the day. For the most part, it's a fairly quiet news day. There's a few stories I'll cover after this, but more in passing. I just found this an interesting story just about my new favorite subject, EVs. So there's a company out of Sweden that I have not heard of. It's called Polaris. Polaris. So not like the off-roading company. This one is different. Polestar. I'm sorry, I totally got that wrong. Polestar is the company, and they are an EV company out of Sweden, and they are apparently just crushing it. The company exceeded a 50,000 vehicle delivery target and expects to increase deliveries by nearly 60% this year to an approximate 80,000 cars. They are still net negative as a company. It's not surprising. Many tech companies are. Many EVs still are, right? They are still running off of investor capital, but its annual losses were cut in half last year. So that is very strong. And in a market where, as far as I know, I could find nothing that says it sells outside of Sweden. So it's a very strong company, coming out very aggressively. I'm sure we're going to start to see it more in Europe as a whole, as well as potentially here in the United States, right? Volvo is a company out of Sweden that is very popular in the United States. Spotify, IKEA, we do like Swedish companies. So potentially this is another competitor here domestically with, obviously, Tesla. And I think Ford is the next greatest leader. I think Ford is the greatest competitor to Tesla right now. They have manufacturing power. They have good cars now. They have multiple different EV lines, including a truck. So I think Ford is going to be the strongest competitor outside of Tesla. But we'll see. This is very interesting. And by the way, I should mention, because I mentioned Volvo, Polestar is a joint venture with Volvo. So it is a startup company that has heavy investment with Volvo, as well as a Chinese-based firm as well. So China's everywhere. But I don't know the percentages of who owns what. But that is just one of the last interesting stories I'll cover. The other ones I'll just mention in passing. Salesforce had a record-breaking quarter, mostly because of the layoffs and the cuts that they did in the previous year. Europe is having staggering inflation. So Europe's inflation is still at 8.5% month over month, whereas it was as high as 10.6 back in October. So they are seeing progress, but their inflation is not falling as aggressively as they would like either. So the ECB, the Central Bank of Europe, is probably going to be raising interest rates there as well. So it's a global market. Obviously, that we knew that recession was global, but theirs is especially bad. That's not surprising. Smaller economies and much more of a social state, so it makes sense that their inflation would be much higher. That's pretty much all I had to cover for today. Not a huge news day. Bond yields are also up significantly, and that's why the S&P is slightly down. They are forewarning of slowdown in the economy again. Not seeing it. Gold did tick up a little bit yesterday to 1840. It's at 1839 right now. It actually may have closed higher. I'm just going off of just the spot price yesterday, but still lower than where it was a few months ago, so no cause for concern for me. That's it. I'm going to hit work. I hope you guys set amazing goals. I hope you meet those goals. I'll be seeing you guys tomorrow morning, and have a great day, and take care. Bye-bye.